All right. Good morning, people. Happy Thursday. I'm so happy you guys made it in here. Just going to get started with some morning announcements as you guys trickle on in. I want to welcome you all to our webinar today. This is BPM RIA, Broward, Palm Beach, Miami-Dade Real Estate Investors Association, your only local chapter here in South Florida that is approved with the National RIA. My name is Alexa, COO, and we have an awesome webinar for you guys today. We're going to discuss, this is pretty much a general subject line here. This is, today's class is going to be, more of a podcast style class, but there's been some changes, some updates, some things that we really want to inform you guys and just get that information over to you. So that is why we summoned today's call with our CEO and lead mentor, Anish, and the chief tech strategist at Advanced Tax Advisors, Jose Ramirez. They will introduce themselves in just a moment, but just to get us started on a very positive, awesome note, I will be giving a 1-year membership away today. So if you're interested in entering the raffle, all you need to do is text the word membership to our event line, 954-800-6961, if you're interested in winning today's raffle. So go do that. I put the details in the chat for you guys. Details are on the screen. Go, go, go. Good luck. I'll announce the winner at the very end for you guys. So we have a ton of upcoming events this month. Guys, 3 webinars next week, a Saturday workshop this weekend. Please, 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 I invite you guys to go to the website right now, click the link in the chat and get registered for all these upcoming events. Guys, they're all free. I mean, it's incredible what we have available here at BPM RIA. We do our absolute best to get these events sponsored for you guys. We have absolutely incredible vendor partners, such as Jose, for example. They are dedicated to you guys and growing your business and getting the information you need to keep excelling in this industry. So please go to the website, come out to our workshop this Saturday. If you are not the best on social media, you're not the best in front of the camera, that's okay. Trust me, you guys should have seen Anish in the very beginning. I love you, Anish. It was scary. It was scary. Even Jose has gotten so much better, you guys. This is a skill that you can sharpen. I promise you. Like, I have seen it before my very eyes. So if you're not great in front of the camera, if you're available this Saturday, Broward, come on out. You must register and save your seat to attend the workshop. It is limited seating, you guys. So take advantage and hope to see you guys there on Saturday with Next Mill Mastermind. And then you guys, again, bunch of raffles. We have Jose coming back for his very own webinar next week. So come on back on Wednesday to see Jose. He always has some awesome stuff for you guys. So see you guys at all of these webinars. And again, our monthly meeting is right around the corner. You guys can't miss any of these events. So my favorite way to keep up with events, super easy. Text the word BPM REIA, all one word, no spaces, to our event line, 954-800-6961 to get those updates via text with the registration link. So convenient. Love it. Love it, love it. So go look at the screen to do that, as well as the chat. Guys, check out the chat. I'm putting helpful stuff in there for you guys. Alrighty, quick start. Our next quick start is August 10th and 11th. I know this is so far away. It is not. It is going to fly by, you guys. So get registered, mark your calendars right now so that you do not overbook yourself, schedule something else. You want to be here. This could be the last quick start of the year, you guys. So please take advantage and get locked in. Jose is actually one of the coaches on the quick start training. We have 4 different business owners on this training for you guys to learn from and just get as much value as possible, get connected with them and start building those relationships with people in our power team that help us get all of our deals done. So you guys, we have member pricing, non-member pricing. Look out, I don't know what happened with the Panthers. Okay, guys. So just make sure you're on the email list because we are huge sports fans here. And sometimes there could be a pop-up sale with some, winning. So you guys say your prayers and let's get this done. Go Panthers. So we would love to see you at this 2-day live Zoom training, cameras on, microphones on. And I did pop a poll up here to see who is interested in this training. It is discussing wholesaling, flipping, rehabbing, absolutely incredible money back guarantee. Can't get better than that. So hope to see you all there. Members, as you know, you get all the good stuff. You get the discounts, you get the networking meetings, all for free, 4 quarterly meetings for free. Your guests come in at a discount. So go get your memberships right now before our next quarterly meeting. Start taking advantage of all those benefits that we get through the National RIA, discounts to Home Depot, Rent Perfect, Millennial Insurance, CAMA plan, self-directed IRA. Guys, these are the things that we need to lock in and start utilizing and start saving money and making sure we are, getting all those benefits and using them. So I have a replay on our YouTube channel discussing all the benefits for you guys that we have through the National RIA benefit package. So make sure you check that out. And thank you guys so much always for responding to these polls. We have to make sure you guys are awake before we get these guys in here. So you guys, mentoring and coaching at BPM RIA. Some of you may know we offer one-on-one coaching programs. Some of you may not. I invite you to book a discovery call right now on our website. This is going to be a chat with me and you one-on-one where we can discuss what you're looking for in real estate investing. We have 2 absolutely incredible programs where we put up 100% of the money for our students' deals and split the profit 50-50. You have your own personal mentor. It is an absolutely incredible opportunity, and I am more than happy to discuss what is included in the programs for you guys. I have a breakdown of everything we include as well as the pricing information for you guys. So go book your discovery call so we can chat. I love speaking with you guys. And last but very not least, we have been approved to work with a third-party funding. So please, you guys, go scan the QR code on the screen if you're interested in funding your education. This is super important to use all the resources available. This is super convenient as well. You need a minimum 620 credit score, $35,000 verifiable income. It's a soft credit pull and you get your response in the same day. We couldn't ask for more. So if you're interested in that funding, go ahead and scan the QR code, book the discovery call with me. I'm more than happy to email that link over to you guys. And thank you all always for giving me the opportunity to let you know what's going on here at BPM RIA and what we have to offer. I will be putting helpful links in the chat box throughout today's session, but please, if you guys have questions for our speakers today, go ahead and put those in the Q&A box. You will see a Q&A box down in your Zoom menu, and we are more than happy to answer your questions today, guys. This will be an interactive conversation. Jose and Anish are just going to be discussing some, cool stuff, some insider knowledge, and I'm excited. So we don't want to miss those questions. So please put them in for us. And you guys, please take over. We're recording today's session, but I believe we're only going to send the recording to the attendees, if I'm not mistaken, right, Jose?
Well, this is your webinar, so however you want to do it.
You're okay with it? Okay, so we
Yeah.
will be posting the recording to YouTube, but we don't want to miss your questions. Put them in the Q&A, and if you want to win the raffle, you have to stay until the end. So
there we go. Thank you, Alexa.
absolutely.
So my name is Anish Dave, CEO of BPM RIA, formerly known as BRIA, the Broward Real Estate Investors Association. I do see a lot of new names. I see some familiar faces today, so welcome. One of the things that we kind of threw this webinar last minute because not only is Jose Ramirez one of our chief tax strategists, he's a personal friend of mine, and we got to hang out a little bit, and he says, hey, did you know this? Did you know that? And I just sat there and said, nope, don't know that. Not sure of that. May have heard of that. And he's like, you understand? Yeah, he's like, you understand this is really, really important. And I said, you know what? We're doing a webinar.
Done.
Because there is no way I will even remember all the stuff that we went over. So Today is, again, something a little bit different where we're just going to have a chat, exactly like Alexa was saying,
Yeah.
podcast style, where we'll answer some questions, tell you what's been going on. And before we get started, Jose, do you want to introduce yourself just in case
Yeah.
who doesn't know you?
Excellent. Good morning, everybody. Jose Ramirez, Chief Tax Strategist with Advanced Tax Advisors. And yeah, like Anish said, we're going to talk about the BOI report. I mean, this is something that kind of came out of nowhere. It became law effective January 1st, 2024, where all LLCs now we all have new requirements, right? LLCs, corporations. And you know what's funny is that, we've been calling all of our clients, letting them know about this new law, new requirement. And I will tell you that 99% of them have never heard of this. And as I'm reading the instructions, as I'm reading the Q&As from FinCEN, because this is coming from the U.S. Department of Treasury, is the feds basically, right? It says on there that the government is doing a huge campaign to let people know, business owners know about this. I haven't seen any campaigns. Have you? I mean, I haven't seen any other than the ones you've done and I've done.
Yeah, not
Nobody,
too many.
nobody's like letting people know, right? So it's kind of bizarre how this is being implemented this year, and people, they just don't know. I mean, they're going to be, a lot of people are going to be blindsided by the penalties. So I thought it was interesting to learn that nobody really knows about this yet.
Yeah, and again, you know me, I'm 100% transparent. As soon as I met with Jose, within the week, guess who filed their stuff on that end of it? Meaning, it's not on the top of the radar, right? For me, like generally speaking, right, you want to get your tax returns done. If you have a Florida corporation, you want to renew on SunBiz, and then you think you're done. So let's talk about what the actual act is, or I know you said it came out January 2020 for his law. So who's responsible to filling this out? What kind of company?
Yeah. So it was a law that became effective January 1st, 2024, but the law was passed in 2021. So nobody was thinking about it until now, right? Because it became effective January 1st, 2024. And even then, nobody had instructions on what to do, because January 1st came around, there was nothing really provided until a couple of weeks after that. So who is responsible? The business owners are. So the business owners have the responsibility of reporting the beneficial owners to FinCEN. It's a department within the U.S. Department of Treasury. FinCEN stands for Financial Crimes Unit of some sort. They are the government body that handles financial crime units, money laundering, terrorism, and the government's trying to track down more of the people that have income in other places that are terrorists, money coming in, and that's how they're pitching this, right? That's how they're proposing this law. So yeah, all business owners, you, me, our clients, anybody that's in business. There's some exceptions, and there's a list of exceptions which most of us don't qualify, like banks, securities and exchange corporations, things of that nature.
So I mean, so when we say all, right, are you saying doesn't matter if you have an LLC, S corp? What about a sole proprietor? Like,
yeah, well, sole proprietors are a little different, right? Because sole
Right.
proprietors can be an individual, like Jose Ramirez doing business under Jose Ramirez, no LLC. So it depends. So if a sole proprietor was an LLC that was registered with any state, right, the Secretary of State, then yes, you have a requirement. Now, before I go any further, this is for entertainment purposes, education purposes. We're not giving you any legal advice. We're not giving you any tax advice. Although I am a tax advisor, I am not your tax advisor, whoever's watching. I'm Anish's tax advisor, so I can give him advice. All right. So disclaimer there, we're here to kind of have a conversation and not give you any advice on how to handle this, but to make you aware that this is here and you have to deal with it. Okay. Going back to your question, remind me what the question was.
Yeah. Well, we're saying obviously sole proprietors, they may be exempt.
Yeah. So sole proprietors, as long as they are individuals, like
Correct.
you doing business under your name. Not if you have an LLC as a sole proprietorship, then yes, you have a requirement to file it.
Yeah. And then the other questions I always get also is, is that just in Florida? Is it, I know
Yeah.
you have some Wyoming
Yeah, so I've
LLCs
gotten a
and-
lot of that lately, questions about Wyoming, because some of our clients have Wyoming entities, they like the anonymity. So they're like, wait a minute, like, Wyoming is supposed to be anonymous. Why am I gonna report to the feds? Well, it's a requirement now because it's law and you have to do it, right? So they're saying that they're not gonna make that information public. So you could still keep the anonymity, but the feds can share the information with the states, local authorities if they need to, if they're investigating some sort of crime or something along those lines. That's how I see it. But we can kind of go over the list. I mean, what is a beneficial owner, right? What is beneficial ownership information? Beneficial ownership information, according to the Q&A, refers to identifying information about the individuals who directly and indirectly own or control the company. So that is a tricky thing, right? Because they're owners who own 25% or more of a company need to be reported as a beneficial owner. Also, people who have substantial control over the company, like are able to remove, add directors, including directors, presidents, vice presidents, managers of the company, would be considered to have substantial control, and they would need to be reported as beneficial owners, even though they may not own equity in the business, they may not own shares in the business, but they will still be considered beneficial owners.
Wow.
Right.
Okay. Yeah. I mean, and I already got a question that popped in. Does this
Mhm.
include all LLCs and corps, both new and older, established ones? So let's say, I know there's a requirement if, let's say I open one up this year.
So if you incorporated this year, you have 90 days to do your BOI report. So if you did it January 1st, 2024, you have 90 days, right? If you don't do it within the 90-day period, you could be subject to penalties, and the penalties are significant. As you know, they started out at 500 a day, but they went up to 591 a day, adjusted for inflation, apparently, right? So, and if you did an LLC or a corporation before January 1st, 2024, then you have this full year to do it. So the government's giving you time to kind of get familiar with what the requirement is and to get somebody to help you, or you can do it yourself. You don't need a lawyer or an accountant to do it, but a lot of people are using their lawyers and accountants because they're overwhelmed with this new information, right? You could definitely do it yourself, file it before January 1st, 2025. So by December 31st, you should have reported your BOI information to FinCEN if you establish the LLC or corporation before January 1st, 2024. So it changes depending on the date, right? So if you have an LLC created in 2024, then you have 90 days. If you have an LLC created in 2025 forward, you have 30 days. So the time period shortens depending on the year that you're setting up your LLCs, right?
Yep.
It's a good time to get rid of some LLCs too. I mean, if you don't use them, why would
Well, that's what I was going to ask you
you know?
was, what happens if you set up an LLC and you thought, right, or whatever company that you set up, and you were going to buy real estate in it, and then you didn't, right, or you didn't really do anything with it, you just set it up. So really, you had no income, let's just say, because there's no taxes in it. Then, does it make any sense, or do you have to still file? Meaning, is the revenue generated or non-revenue, is that important?
No, what the definition of who's required to file says that anybody who has it's based on the effective date of when it was filed with the state, right? So if you have an entity recorded with the state and it's active, you're required to file a BOI report. Income, no income, that's irrelevant. That's not mentioned in the instructions. So if you have an LLC, that's been sitting for years, not doing anything, it may be a good time to get rid of it, right? If it's inactive, if you dissolve it, then you wouldn't have a requirement, right? Because it's not active. It's no longer active.
And would you have to let the government or let them know that it's inactive, or you just wouldn't have to file, right?
I don't think that's a great question. I don't think
Yeah.
so. I mean, the instructions say that companies, LLCs, INCs that are inactive with the state, there's no requirement.
Got it.
But I don't think you have to let them know that it's inactive. It's not mentioned in the
Yeah,
instructions.
I wouldn't think so. I just wasn't sure. if that would be something that people ask in
Yeah.
general. And I know you said that you could do it yourself. Is it just a simple? I mean, I know you did mine, so it's a
Yeah.
little different for me.
Yeah.
It was super simple because that's a service you offered,
Yeah.
and it
So
wasn't.
we do offer it to our clients, and we're only doing it to our clients because it is a it's a high liability service, right? I mean, if it's done incorrectly or if it's not done at all, or if something changes after the fact, it is the owner's responsibility to update any changes to the beneficiaries, right? For instance, if the beneficiary moves or he's removed from the company, or you add somebody new to the company as a partner or as a director, any changes that happen with the company has to be updated within 30 days of the change, right? So we tell our clients, yeah, we'll help you file it. You know, there's an engagement letter involved. We have to, inform you of what the service entails, because if any changes happen in the future and we don't know about the changes,
Yeah.
we can't help you, right? So it is your responsibility to let us know if any changes happen so that it can be recorded or updated. The BOI report can be updated. So yeah, I
So
mean,
that
we've been helping our clients doing it, and it's working out fine.
yeah. So I mean, when you said it changes, you said obviously ownership changes, right? Whether
Ownership changes. If you add a
25%.
director, you add a new CEO, remove a CEO, whatever the case may be. The company moves. There's a name change. There's a DBA,
Okay.
something that changes.
Is it also like, for example, having a licensed real estate agent and mortgage person, you do have to let them know if you personally move, or is it just the business move, or
Both. If
both?
the business and the beneficial owner, so that
Got it.
but everything's got to be updated. So the government wants to know who owns what, when, where, how, right? If that where moves, if that where changes, they want to know. Yeah, it's kind of in my opinion, it's kind of an overreach. Don't you think it's an
Yeah.
overreach of the government?
1 million%.
Yeah, it's crazy. I mean, I don't
Yeah.
understand what's happening.
What about, and so the other things I get, right? And we're talking entities, would that also include like trust? If you set up, I know on some of the
Yeah.
advanced techniques where
Yeah, so that's actually on the Q&A. The trusts that are
Okay.
done recorded with a court, that it's not a trust that is not recorded with the state. No, there's no requirement. But
Okay.
if there's some sort of trust that has to be done via the state, then yes, you would have a requirement to do a beneficial owner report.
Right. Okay. Yeah. So like a lot of times if you guys are using them, we're obviously on the investor side. If you're using land trust to buy something to get in and out,
Yeah.
then that's not really recorded with the state. That's not
No,
recorded
so
anymore.
that my understanding is that doesn't require a beneficial. So here it is. Here's a question. Is a trust considered a reporting company if it registers with a court of law for the purposes of establishing the court's jurisdiction over any disputes involving the trust? And the answer is no. The registration of a trust with a court of law merely establishes the court's jurisdiction over any disputes involving the trust, does not make the trust a reporting company. So trusts are okay. There's no, and I'm reading directly from the Q&As from FinCEN. So,
Yeah, exactly. Yeah, because I mean, for us as real estate investors, that does come up. I know you won't have to do anything with like self-directed IRAs or HSA because the custodian probably has to file their own stuff.
yeah, I would ask the custodians about that. Because I know some self-directed IRAs do have an LLC associated with them,
Yeah,
but they may be some sort of, there may qualify for some sort of exemption.
got it.
So I actually have a list of exemptions here, which none of us qualify for. And number one, it says securities reporting issuer, whatever that means, governmental authority, banks, credit unions, depository institution holding companies, money service business, broker or dealer in securities, securities exchange or clearing agency, other exchange act registered entity, investment company or investment advisor, venture capital fund advisor, insurance company, state licensed insurance producer, commodity exchange act registered entity, accounting firm. I guess I'm not required if I'm considered an accounting firm.
There you go.
Public utility, financial market utility, pooled investment vehicle, tax exempt entities. That would be like a 503, non-for-profits, I would imagine.
Mhm.
Entity assisting a tax exempt entity. Whatever that means. I don't know what that means. Large
It's
operating
not
company.
us.
So it's definitely not us, right? I mean, we are in business to make money. We're not tax exempt. We're not non-for-profits. We're not banks. We're not governmental authorities. We're not credit unions. So definitely not us. We are all subject to this new law.
Yep. And Ken's asking, what if your LLC's in a trust? Do you still have to fill out a BOI?
Yeah, so you do. So it also addresses, FinCEN addresses the fact that there are parent companies. The parent company owns multiple LLCs. So an LLC cannot be the beneficial owner. An LLC, if it's owned by another LLC, then that owner of the second LLC, like the child LLC, would be the beneficial owner. So you can't use an LLC as a beneficial owner. So when you have multiple LLC structures, like the parent, the children here, it all ultimately comes down to who the owner is down here at the bottom, right? That's who the beneficial owner is. And then you have to do BOI reports for each one of those LLCs. So not just the parent company, you have to do
Yep.
the multiple LLCs that you have underneath. So don't ignore the multi-level LLCs. If you have a multi-level LLC, don't think that just the parent company is required to do one. All of the LLCs have to do one.
Got it. And what do you have to submit for? What kind of documentation?
What they're gonna ask for is your ownership. They're gonna ask for where you live. They're gonna ask for a copy of your ID. They're gonna ask some questions about the entity itself, the jurisdiction of where it was established, right?
Yeah.
Who the owners are, IDs, and that's basically it. I mean, it's just a summary of who owns what, where, when it was established, where it was established, right? And that's basically it. I mean, it's not rocket science. It's just a little bit overwhelming because you're dealing with the feds. So people
Yeah.
are like, I don't want to deal with this, So
Yeah, and obviously if I think you already mentioned it, but if you don't file, right, per day,
yeah,
it's X amount fine, right?
yeah. So if you don't file by the deadline or you file it incorrectly, the feds can penalize you $591 per day, up to $10,000. And if they learn that you're being fraudulent about it, you're doing it on purpose for whatever reason, or you're filing the incorrect information on purpose, there's some criminal penalties as well. So be careful with that. I would say like the main concern that people have with filing their own BOI report is that they don't really understand the definitions, right? They don't understand what a beneficial owner really is, right? Beneficial owner is somebody who owns 25% or more, and also somebody who has substantial control over a company. Now, what does that mean? What does substantial control mean, right?
Yeah.
I can read it to you. I mean, I have the definition here, so if you guys want to know. So what is substantial control? An individual can exercise substantial control over a reporting company in 4 different ways. The individual falls into any of the categories below. Okay, here we go. The individual is a senior officer, the company's president, chief financial officer, general counsel, chief executive officer, chief operating officer, or any other officer who performs a similar function. So any director, right? Any director that has control over the company. An individual who has authority to appoint or remove certain officers or the majority of the directors or similar body for the company. So anybody that has the authority to remove or add directors for the company. An individual, the individual who is an important decision maker for the reporting company. That's a little vague. I mean, what does that mean, right? So that's
Yeah.
where people get hung up. It's like, okay, I may not be a part of this company, but maybe I'm a spouse of the owner and I make decisions all the time, right? So she or he's got control over the company. Maybe you want to include that person because that person makes decisions over the company, even though they are not equity owners, right?
Correct.
So that's where people are getting hung up. It's like, okay, I don't really know what this means. Do I need to include my spouse? Do I not include my spouse? Right? That's where people are like afraid of making mistakes.
Yeah.
But it's It is what it is. We have to deal with it. Yeah,
Yeah.
it's a new thing.
No, you got, it's, it's the same thing that, you have to renew your license,
Yeah.
on sunbiz.org for your Florida corporations. I mean, it's just, hey, you gotta file it, right?
Yeah.
And I don't see it going away anytime soon. And it's actually, this goes into Deborah's question. Once you do an initial report, and then annually, or whenever there's a change, are you required to resubmit?
Yeah, so this is a one-time thing. You do an initial report. It's not like you have to do it yearly, like you do the annual report with the state. This is a little different. This is just a one-time thing, unless anything changes.
Right.
So if anything changes, like you're no longer the owner, or you add a new owner, a new director, a new CEO, remove a CEO, or the company moves, or the company has a name change, the beneficial owners move, they have a new address, that needs to be updated. So unless there's changes, you don't have to touch it again, right? Which most likely, there will be changes eventually,
Yeah.
maybe not right away, but when it happens, you want to update it.
Yeah, absolutely. I know Yvonne's asking, where do you get this form?
Where do you get
Yeah.
the BOI
Yeah,
report?
or where do you
form?
report it? Yeah, do you have?
So it's on the FinCEN website, the Financial Crimes Unit website of the U.S. Department of Treasury. I think it's just that. It's fincen.gov. You can read up about it there. Let me see if I can find it. I'll put it on the chat. Let's see here.
Yeah, and Nicole's asking what if you close down the LLC? So let's say it's not using, kind of like the same situation. We're not, I have an LLC, I have not been using it. Would you still file an initial report or not really?
If it's still active with the state, yes, you're required to do so.
There you go.
So if you're not using it, it's a good time to have a heart-to-heart conversation with yourself and say, am I going to use it or not? Do I
Yeah.
want to deal with this stuff going forward or not, right? But yeah, I mean, if eventually you're going to get into business, do the BOI report and you're good, right? As
Yeah.
long as you're in compliance, you have no issues, right? You want to make sure that you're doing what it's kind of like filing, like you were saying, filing a tax return.
Yeah.
I mean, you have to
gotta
do it,
do it.
right? You got to do it. Same thing. Now, this is just an additional requirement you have to do, right? If you don't want to be penalized. Yeah. So
Yeah, it makes sense. And he just added that in the chat, guys.
yeah, I put the
thanks for
website there.
Yep.
You have questions
Great.
about it, you can read up on it. For those of you who are here, I'm so glad you joined because you're going to be ahead of the game, right? Because most people don't even know about this. And I am so worried. I'm concerned for most business owners that don't know about this.
Yep.
Because I got a feeling that a lot of people are going to be blindsided because they haven't heard of this. Like I said earlier, 99% of the people that we've called our clients never heard of it, right? Had we not called them, they would have never heard of it.
Yep.
Right?
I mean, you might as well. I mean, I know some people, like you said, are afraid to make their own mistakes. You obviously could fill out the form yourself. I know you're doing that for your current clients.
Yeah.
Are you doing that a one-off too, if they're not a current client, or to file for them, or not really?
It depends. It depends. It depends on it depends on the relationship, because most people that are on this call, we probably already have a relationship with.
Yeah.
And depends on when the entity was created. If it's an entity created in this year or in future years, we're probably not going to mess with that. We would like the creator of that entity to be able to do the BOI.
Yeah, and be a client, it's just easier. So and again, obviously if you're not one of Jose's clients, make sure you reach out to maybe your accountant or attorney to help you with that if you don't do this yourself. So and then you just got to ask yourself on the other end of it, right? I'm just going to say, as a business owner, I love that you're reaching out to your clients. How come they have not? Right? If they're you're always very proactive.
Yeah, we're proactive. I mean, you know us. We do a lot of
business.
communication via email. We do a lot of outreach. We're very proactive when it comes to law changes. Whenever the law change, especially around taxation, we're on it, right? Yeah, I mean, it's bizarre how the government is not reaching out to people. They're saying they are, but I don't see how. How are they reaching out to people? I haven't received any letters or anything, right? So,
and Yvonne, just to repeat, when it's due, if your entity was done before January 1st, 2024, you have until the end of the year. to do it. Any new entities open this year, let's just say you open it May 1st, you have 90 days to fill that out. So you do not have until the end of the year.
Right.
So pretty easy way. So if you haven't done anything new this year, you have until the end of December. Frank's asking, what if my father was the owner of the foreign company and he passed away and his inheritance has not been completed? Who should be mentioned in the BOI? Oh, that sounds like,
The father owns an LLC.
yeah, he passed away and it sounds like it hasn't gone through probate yet.
That's interesting. I would ask that question to your probate attorney. Yeah,
Yeah.
but if I had to guess, you can do it for your father. If the LLC is still active, somebody's gonna have to do it. Yeah,
Yeah, that's, I mean, good scenario that I would never even thought of,
Yeah.
but
that's
yeah,
kind
you
of
start thinking
unusual.
all these, yeah, you start thinking all these things that are coming up. I know that's any other new things that have come up. I know that's obviously the major change right now.
Mhm.
And as we're answering some of the questions, we could even talk about some of the tax planning end of what you're doing. So I know we've done a lot of webinars with Jose, and again, he is a tax advisor more than just an accountant, right? Or a CPA or a true tax advisor. What are you preparing? We talk about best practices. Do not meet your tax advisor when December or
Yeah.
something saying,
Yeah, don't wait till the end of the year, obviously, right? Because
right,
there's no tax planning after December 31st. And
correct.
I usually go on vacation Christmas week, so don't reach out to me that week.
Well, so what would you advise? Let's I know whether your clients, we can pick those clients or
Yeah.
their accountant, right? So
Yeah.
I think that the big thing is, and we talk about this all the time, is just because they're a CPA does not mean they're a tax advisor.
Yeah, I mean, when it comes to tax planning, you want to work with a tax planner, a tax advisor, right? Somebody who understands the tax code, somebody that's going to help you mitigate your tax liability, not just prepare the returns. I mean, any accountant can prepare the returns, but the tax planning, well, I shouldn't say that. Actually, a lot of accountants mess up the returns royally. So
Yeah.
I'll take that back, right? Especially when it comes to real estate, because real estate is a lot more complex than any other business because of the depreciation component, right? In my opinion. Yeah, we encourage our clients to meet with us at least on a quarterly basis. It doesn't always happen that way because
Yeah.
they get busy, or some people that they hear tax and their brain goes numb, like they don't understand, they don't want to deal with it, right? So, but at least twice a year, mid-year, right now is a good time to meet. The summers to review what's going on the first half of the year, and plan for the second half of the year to see if there's any asset purchases that we need to consider.
What about those people that, yeah, I mean, I'm not one of those, but I'm not going to pick on those people that do the extension, right? They have until October 1st. Is it hard to tax plan if they don't know where they're at? Like, what do you see? Let's talk about best practices of like your clients that do really well, like that understand it versus the ones that may be challenged. Like,
Yeah,
what
I
do you
mean,
see? What do you see?
the clients who do well are always going to plan ahead, right? They're always going to reach out to me mid-year and before the end of the year, October, right, to make sure that we're implementing something before the year ends. Extensions are fine. I mean, I actually encourage all of my clients to file extensions because when you're a business owner, March 31st is a little close, right?
Yeah.
March 31st is kind of undoable. I file extensions every year and it's fine. There's nothing wrong with that.
Right.
Where there's a problem is that when you don't execute on a tax plan before the year ends. So you want to meet with your advisor mid-year, you want to meet with your advisor October, November at the latest, to come up with a plan to shift some things around to reduce that tax liability, right?
Yeah, I know like some of the complex clients, right? Because there's the accounting side and then there's the asset protection side.
Yeah.
And what I mean by that is, right, the attorney may or may not say, hey, this is best for you. And then on the accounting side, right, there's, well, why are there so many costs?
If you are going to an attorney to do your entities, I'll tell you, you better be working with an attorney that understands tax, because if they're just worried about asset protection, they're gonna set up a complex structure that is gonna cost you thousands and thousands to maintain a year, And a lot of times, if you're spending, let's say 5,000 a year, 10,000 a year just in tax returns, in 10 years, you've spent 100 grand. I mean, it's ridiculous. And what are you protecting? Are you protecting a 100 grand property at 200?
Yeah.
It's got to make sense, guys. What I'm saying is sometimes, and I'm not giving you legal advice, but I am a business owner. I own real estate. I use LLCs in Wyoming, right? I have one LLC in Wyoming that owns all my LLCs in Florida and North Carolina. My structure is simple. I do one tax return, my personal tax return, which includes all my real estate, and I also do a separate tax return for my practice. That's it. Keep it simple. You still have protection, is my understanding, and the anonymity is great, right? But don't complicate things, especially when you're starting out. Especially when you're starting out, you don't want to set up all these complex structures with C corporation. Never do a C corporation. C corporations, S corporations, partnerships. This one owns the other. You got to go a whole puzzle going on. You got to figure out what's what. Yeah, you don't want to do that when you're starting out. All right,
Yeah.
it's
funny because and listen, I'm owning the RIA. I know there's companies that do that. They really go into selling multiple structures. And sometimes, I've spoken to people and they're like, oh, I spent X amount, $10,000, $12,000, $15,000 setting up all these structures. And I said, well, why are you doing that? They're like, to protect my assets. And I go, well, what assets do you have? Oh, I don't have any yet. Right. And they're almost like they're literally taking the 12 to 15,000. I'm going to use those numbers, and then they don't have any money for marketing for deals.
So they're done before they even get started, basically.
Yeah. So that's one of the challenges that I see, especially for the newbies that you're into it. And I mean, I'll talk about this a little bit. Again, none of this is legal advice. So I'm gonna
we're just sharing our experience, right? I mean,
in our experience.
Yeah.
What I can tell you is when you do partnerships, you're set up LLCs, the strength of an operating agreement, right? So how important it is to have an operating agreement, especially when you're with partners.
Yeah.
Everything's nice and rosy until it's not.
Right.
Right. And the operating agreement will literally tell each person what their responsibilities are. Hey, if this happens, if Nish passes away, he's not going to be Jose's not going to be partners with his wife on the business, right? You want to make sure you have all that stuff spelled out. Hey, this is the responsibilities on this on the day-to-day. So I see a lot of new partnerships or people creating partnerships, and the real problem happens not in the beginning because everyone's excited. It's usually around midway. What I mean by midway is now you're starting to make some real good money, right? The company's starting to make some good money. Now Jose is saying, hey, Nish isn't holding his own, right? Or on that, it's not fair. I'm the one that's doing all this stuff and Nish is always on vacation. Why is he 50%? And so that's when the challenges start happening when it comes to operating agreements also.
Yeah.
I don't know if I know obviously a lot of law firms do that also. Do you do that on your corporate?
No, for those that have partners, I'd encourage them to see an attorney to help them write a custom operating agreement. Usually when it's a spouse, married couple, we use a standard operating agreement, nothing to be modified, which is fine.
Yeah.
But when you have actual partners that are not family, then I tell them go to an attorney. You'll be better served with an attorney, and I usually refer them to one.
Yeah, absolutely.
Yeah.
Frank's just asking again, can you specify again if BOI reporting has to be done for foreign owners owning less than 25%?
Foreign owners, I don't know that it specifies the difference between, let me see if I can find that answer. My understanding is that less than 25% is not required. But the foreign piece could change that. I don't know. Let's see here.
See, yeah, you guys know how new this law is. We're learning on the fly, right?
Yeah, there you go.
And I agree with Bijal, my dear friend, that I've known for God knows how many years, just messaged me saying, hey, and she's a great attorney. So this is exactly why people shouldn't Google operating agreements and other legal documents, because they will haunt them in the future. And I agree with you. and I'm not going to pick on some of those online companies, and some of the names that they're going to be able to legal Zoom, no, legal Zoom, yeah, any of these, where they got these just templates.
Right. Yeah.
So I think it's a challenge when it comes to that.
I mean, it talks about domestic reporting companies and foreign reporting companies. So domestic and foreign are required to do this, but it doesn't say if there's any. I would imagine not. It doesn't say there's an exception for a foreign owner, but if it's under 25%, I would say they're not required. But I would check with your attorney on that.
Yeah.
Like I said, we're not giving you any legal advice or any advice whatsoever. We're just kind of letting you know that this is a requirement and you should do your due diligence and figure out what you need to do for your entity.
Yeah,
Okay.
and good in the chat. How many of you guys have actually already filed this? I'm just kind of
Yeah,
curious.
it's a good question. I'm
Yeah.
curious too. How many?
Yeah, has
of you
anyone
guys have
actually
already-
filed this besides me and Jose? Jose and I? Better use better English there. I'm just, or is this the first time you guys are actually hearing about it?
Yeah, who's hearing this for the first time ever? Okay, Zoom user.
Okay.
Kelly's already filed it. Good. Some people don't have their name listed, so Esther says yes, has already filed.
Okay, cool. Okay.
Ken knows about it but hasn't filed. Nicole has filed. Good. Excellent.
Yeah, we got a few people. Okay, that's good.
Okay, good.
That's
George, not
like-
yet. Yeah, the whole purpose of this conversation is to make sure that you're aware, right? We wanted to kind of like have a bullhorn and let people know that this is a requirement, because we would hate for people to get penalized for no reason. I mean, for just not knowing about this. So that's what we have in this conversation.
Yeah, absolutely. Okay. Yeah, some of you guys. So I know, that was the main topic that we're picking on. But we could talk about some of the other things that are happening. I won't get into too hardcore on the politics end of it. I'll kind of keep that out of
love
it.
politics.
I know
I
you
love
do.
what's going on. July 11th is going to be a big day for America.
That it will.
Yes.
And obviously the new tax changes that we've seen, depending on the election, what's going to happen, depends who wins, right? We may see some relief if Trump wins, on what he's perspective.
So yeah, he's got a lot of and in ITs, when I say I love politics, but I mean I kind of have to, right? Because it's directly tied to taxes. So Congress, the Senate, they're the ones that are doing these law changes. So I have to know about it. I know about them, and what's happening with Trump right now is difficult, right? Because he's got a lot of cool things up his sleeve in terms of changes for taxes. Like he's talking about removing payroll taxes, which is phenomenal. That's a huge expense for every business owner.
Yeah.
But now, him being gagged, not being able to speak about his case, he's got a sentencing here in July 11th. So we'll see what happens, right? I mean, it will be very ridiculous for him to go to prison for paying somebody off. That's like me saying to you, Anish, hey, Anish, I'm going to give you $100 grand. Don't tell people about me doing something. How is that illegal?
Right.
How is that illegal? It's crazy to me that they made that illegal, paying somebody something. It's nuts. And if it would have been a misdemeanor, they made it a felony because it's him, right?
Well, I mean, I'd rather not. Because that'll be a very slippery slope kind of conversation.
Yeah, I mean, I'll leave it at that,
side.
right? But my point is that if he I don't know what's going to happen. If he goes to prison, can he still be elected? If he gets elected from prison, what would happen then? I mean, he's got a lot of good policy when it comes to taxation and economy.
Well,
So we'll see
what I read was interesting, right? Is at the beginning of the year, right? They were talking about we'd have some rate cuts, and it hasn't happened, right? I remember, I want to say in January, don't hold me to this, guys. I want to say the Fed was hoping for 3 or 4 rate cuts throughout the year. Yeah, and now it's June and we still haven't seen one, right?
Yeah.
And on the housing side, it's everyone's still worried about obviously the higher interest rates And I could tell you in our market down here in South Florida, there's still definitely a shortage of housing. So yes, interest rates have gone up, but the housing for first-time homeowners or workforce there's not enough. I know local legislation, Florida, it's funny that I'm talking about politics. This is not usually my thing, but they put up, DeSantis put up a bunch of money for developers for workforce housing. And for workforce housing, you can only make a certain amount of money, and to kind of help out, and they're trying to get these developers some incentives. So on our side, on the real estate side, we're still seeing a lot of movement on low income housing or lower pricing. Anything under $500,000, yes, the interest rates have gone up. And some of the houses that we've rehabbed, not only did they pay cash, was one, right? So it wasn't even they needed a loan. Number two, we're also seeing where like family members, like maybe they're borrowing money from mom or dad, that are giving them a big chunk towards down payment to offset the interest rate to make it more affordable. So it's been interesting on that aspect of it. They are saying, it depends if Trump becomes president or not. They think, he's going to be trying to get the Fed to push down the rates to kind of stimulate housing again, because it has been pretty tied up, right? Like if you're looking for a house, I know you love your great house, you put some money into it, and yeah, you might be able to get top dollar for your house, but where are you going to move to? Right. And so that's where we're not seeing the upgrade for people. The other big thing that we are seeing is the big challenges with these HOAs and associations on these older buildings, where they're the 40 years recertification. Actually, I'm going to ask you a tax question just on my own. I'm just curious. I don't know if you pay an assessment, is that actually tax deductible? On a condo, like on an association, like let's say
on an investment property, yes, everything is tax deductible.
Yeah, but on your primary, if it's
primary, I don't think so.
I know, like mortgage interest. Yeah.
I would have to get back to you on that. I don't think so, because your association dues are not deductible on your personal property anyway. But it could be, depending on the assessment, it could be that it adds basis to your property. I would have to.
Okay. I was just thinking out loud because I ran into a person that their association just hit them with an assessment with 80 grand.
Damn.
Right. So how many people have 80 grand just sitting around to write a check?
Yeah. Good, right? Condos are difficult. Condos are scary for that reason.
Yeah.
Especially the older ones, right?
Yeah. Yeah. So it's just one of those things, like best practices. If you're looking at older condos, make sure about assessments, the budget is going to be really important, and see where they are on that 40-year recertification.
Yeah.
Because if they haven't done it, be prepared, and there's no budget, there's going to be an assessment. And then you're going to be on the hook. And the other challenge on that, on the financing end of it, if there's lawsuits or assessments, you may have some trouble getting financing, which is all super tied in. So
I was just speaking to a prospect yesterday who was thinking about selling a condo because of the assessment coming out for the 40-year certification.
Yeah.
So it's in the conversation on whether keeping a condo or not, right?
And that's like, imagine you lost all your equity because of that, or how do you? I think that's what we were talking about with some of the other investors is, what do you do when you get an assessment for $40,000 or $50,000 or X amount? Most people don't have that money just sitting around, right? Oh, am I going to try to refinance from my 3.5% to 7% to pay off the assessment?
Yep.
So it's definitely something that we're starting to see a little bit in our market. It's going to be interesting what's going to happen. So I was actually talking to one of the other mentors, Michael Johnston. We're like kind of not chuckling, but our idea was like, well, this is a big problem. Whoever figures that out is going to make a lot of money on that portion, right? Like, how do you figure that out? I'm not sure. And if you do know, let me know.
Yeah.
When it comes to that. So let's see, we already are.
I have a question. So how many on this call, you guys on the call, how many of you guys are procrastinators versus action takers? Put in the chat. Be honest with yourselves. I, for one, because of my business, it's such a deadline driven business that whenever something hits my desk, it's done within minutes. Like I'm like a machine. Like I just process information, process. I don't stop, right? But that has a lot to do with the kind of industry that I've been on.
Yeah.
I've been in my whole life, right? Um, some of our clients are action takers, right? Some of our clients aren't. So some people need a nudge, reminders. Hey, end of the year is around the corner. Let's meet. So I'm curious now that you, Esther, I love your honesty, procrastinator. I love it. You're awesome.
Yeah. The other people that didn't put it in, they're all
Yeah,
procrastinating.
everybody else is procrastinating. People that are not responding.
Absolutely.
So yeah, I mean, I'm just curious. Now that you have this information, what are you going to do with it, right? I talk about this in my tax planning courses all the time, my tax planning classes. I'm giving you the strategies. Like, here, take them. Now, what are you going to do with it? Are you going to save money with it, or are you going to do the same old, right? Same thing with this. Now that you know about this BOI report requirement, what are you going to do with it? Are you going to sit on it and do
Yeah.
nothing and get penalized, or are you going to run with it and get it taken care of? Guys, this is no joke. This is a big deal. I mean, we're talking
It's not
about
bad.
591 a day penalties. And
Yeah.
we're talking about if you do it incorrectly, or if you don't do it at all, or you do it fraudulently, criminal penalties, right? So for those of you, oh, Darren, hey, Darren, I remember you mentioned you were going to be here. I know you're a procrastinator, but you're doing better. So that's good.
Yeah.
So yeah, get it done. Get it done. This is a big deal.
Oop.
The penalties are hefty. You don't want to be surprised at the end of the year. The Fed's knocking on your door with a bill, right? To have to pay.
Well, the thing is, like, you could still be a procrastinator, not with this. How about that? Right? Meaning, like, you just have to do these things. I mean, no one wants to do them, and after you do them once, you'll be fine. And as I said, if you're one of Jose's clients, and obviously, you may have done it or reach out to him to take care of that too. So
Yeah.
it's just one of those things that you got to really put that on your to-do list. I don't know how else to say that too. So
Yeah, and I personally hate wasting money. Why
yeah,
would you want to waste money on penalties, right? When you can avoid all that altogether. Just don't do it. Don't do it.
yeah. I
Get it
mean, the
done.
other things, obviously, because we have a few more minutes too, is besides on the tax planning. I know, like you've gone over courses a little bit, and we've talked about in the past is on some, especially for the self-directed IRAs, right? So some of you got, or at least it doesn't even have to be self-directed. Camaplan is one of our custodians, a National RIA benefit, and what the benefits of opening up a Roth IRA versus a traditional. Do you want to just talk about the difference between the
Yeah.
two?
So the
Real quick?
self-directed IRA is where I actually own one. Is where you control the investments. You say where the investments are going instead of just putting it in the market, right? So Anish, I know you have one. You do real estate
Yep.
with it. I do loans out of it. I lend money
Yep.
out of it to some of my friends that are doing real estate, right? Instead of wondering what the market is going to do, if it's going to go down, up, I know that I'm going to get anywhere from 15 to 20% doing
Yep.
loans, right?
Yep.
So you have more control. A self-directed IRA, especially if you're doing it in a self-directed Roth IRA, right? Imagine doing some sort of flip or some sort of business using your Roth self-directed IRA. Now you're making 100 grand, 200 grand a year that is tax-free, right? It's going back into your Roth IRA. You're not paying taxes on it. And when you're of retirement age, you can take that money out completely tax-free. Very powerful. I mean, it's not for everybody because not everybody has a business. Not everybody has that business mind that can figure out, okay, you know what, I'm going to do something with this and flip some things.
Yeah.
But for people that are in business, you can find things that you can do. So, you can use your self-directed Roth IRA for, right? It's very powerful, guys. Look into it. If you don't have one, look into it. If you're in business, you should definitely look into it. It's
Yeah,
a
I
big
mean,
deal.
I know there's some advanced strategies also where they could do solo 401ks
Yep.
that are self-directed. So I always tell everyone the first job is for you to make money.
Yep.
The second is to pay my share of taxes. I don't want to pay extra. You just follow the law.
Yep.
And some of these other strategies are pretty big. I think some of the challenges, even especially on the retirement, on the self-directed, obviously the younger you start, the power of compounding interest
Oh, yeah, absolutely.
is like
Use my
next
daughter as an
level.
example, right?
Yeah. I know we've talked about it, you want to just
Yeah, my
use,
daughter's had a Roth IRA since she was maybe 7 years old, I want to say. No, maybe a little older, maybe 9 years old. And now she's gonna be 19 in a few months, and she's got a six-figure account,
yep,
Roth IRA. Never paid taxes on it because she's always had a job. She's either worked for me, for the firm, or she's had jobs elsewhere. And she put money every year, $6,000 every year, right? And that grew with the market because she didn't have it as a self-directed. It grew with the market, and now she's got a six-figure account. So there's so many things that you can do when it comes to planning. It's not just planning to pay less taxes, but it's also planning to never pay taxes in the future again, right? Because there are accounts such as the Roth IRA that will help you grow your portfolio, grow your account tax-free.
yeah. I mean, one of the most,
Incorporate your kids into the business. I mean, it's a powerful. Not only are you teaching them about money, but you're teaching them about taxes, and you're teaching them about hard work because they do have to work, right? So it's a triple benefit to them.
absolutely. And one of the most famous on the retirement, on the traditional like Roth, I know he ran for president. I think he was governor or congressman, Mitt Romney.
Yeah,
Had something, a couple $100 million, and it was all built through his Roth,
yeah.
tax free. And obviously,
Peter Thiel also.
Peter Thiel, yeah. If you guys don't know, he was one of the founders of PayPal, one of the first investors in Facebook.
Right.
And he, I
Just
don't know how much
took off.
money he started his with his Roth that he put in there. I do know that it was valued at $5 billion with a B, $billion.
Yes.
And it's
Tax-free money.
Yeah,
It's
yeah,
amazing. Yeah, that caught a lot of attention. It actually caught attention of Congress as well because they were like, "Wait a minute, what's happening here?"
yeah,
But nothing's changed. Everything stays the same.
yeah.
We can all do it. You can reach a $5 billion and not pay taxes on it if you do it right. If you do it in your Roth IRA, just like Peter
Yeah.
Thiel did, just like Mitt Romney did.
Yeah, and some of the advanced guys that I've seen, they actually own buildings in it. So imagine that, you don't have to worry about the step-up basis
Mhm.
on that. Actually, you want to talk about that for a quick second, the step-up basis, what that
Step up
means?
basis, yeah. So when I talk about real estate, I talk about all the benefits associated with investing in real estate, right?
Mhm.
So number one, you have the tax benefit, especially if you qualify for the real estate professional status, right? Or even if you don't, if you're doing a short-term rental, Airbnb, the depreciation can eat up a lot of the income, your W-2 income, your broker income, your real estate agent income, whatever the case is. Number two, the property's cash flow, especially short-term rentals, they cash flow, they produce income, right? Number three, it appreciates over time. That asset that you purchase for 500,000 today in 10 years is going to end up being, I don't know, 800, a million, who knows? But real estate goes up, right? Real estate goes up. And then also there's a step up in basis. For those of you who have kids, my daughter, when I pass on, eventually we're all going to pass on, right? Eventually, when we pass on, all of our assets get dispersed to your heirs. My daughter will be receiving whatever I own, right? So if I bought a property for $500,000 today, and when I pass on, that property is valued at $5 million, she'll get it with a step up in basis. So I never have to pay back the depreciation at the 500 when I pass on. It transfers to her, and her new basis is $5 million. She can start depreciating the property at $5 million, which is a big deal. Or she can sell the property the very next day and not pay a penny in taxes because she's got to step up in basis. All she's got to do is get an appraisal on the property the day that I pass on to confirm what the value is. So there's multiple benefits, right? Multiple benefits to real estate. I just mentioned 3 or 4. Especially for those of you who are already in real estate, like if you're a broker, you're a real estate agent, you're a flipper, you're a landlord, you may already qualify for some of these strategies, like the real estate professional status. So
Yeah,
start buying some
absolutely.
real estate.
Yeah, it's another way to transfer wealth and pay, I'm going to say relatively no class taxes
Yeah.
down the road. Again, you need to have that education. That's what I want to tell people.
Yeah.
Because otherwise, these little moves that you may or may not make may cost you a ton of money. right? The people that some of you guys may have W-2 jobs and you left the company and the money's still sitting in your 401k at X place. Highly recommend you guys move it over into again, if you're a member of ours, Canva Plan is a National RIA benefit. Move it over. And the thing with these self-directed, they are not investment advisors. They're custodians. So they will never give you advice about investment when it comes to it too. So
Yeah, and for those of you who are no longer employees with the company where you have your 401k, you can do a conversion every year, little by little, depending on your income, to convert your 401k into a Roth product that doesn't pay taxes in the future, right?
Yep.
But you may not want to do it all at once, because then you're going to pay taxes on the entire amount. You may want to you may want to do it little bits at a time, maybe 10,000, 20,000 a year until it's completely converted, so that you don't pay it all at once.
Yep.
And then
that's
once you
actually
have it
what I
in
did.
Roth, all that growth is going to be tax free.
Yep, that's exactly what I did with my dad. We converted it over 5 years, so he wouldn't get pushed into another tax bracket. So the amount of money it saved us. Now that he's also over the 5 years where it's seasoned, and now all that money's tax free too. So it's pretty exciting. Just learning these little things can make a difference in your generational wealth and for your family too. So any last things before we announce our winner? We're almost out of time already, actually. Time goes by so quick on that portion. Any last things that you want to tell our guests on this?
Just, take care of the BOI report. Not that you know about it, do something about it. Don't procrastinate. For those of you who are procrastinators, don't do it this time. It'll cost you. So, and also next week we're having a webinar on tax planning, so join us there. Register for our tax planning webinar on Wednesday, the 26th at 11 a.m.
Yeah. And Kelly, I know you're asking if you convert the Roth to a self-directed Roth to purchase real estate, can you use your own money to cover the rehab expenses? The answer, yes and no, it depends. Depends how you structure it. If your LLC owns 50% of it and your Roth, then all the expenses have to be 50-50 and all the income has to be 50-50. The other thing you could always do is a JV agreement with someone else. Do not do a non-recourse loan, because that's what a Roth, you'll have to pay UBTI, which is you're going to pay tax on it. So there are some ways, yes and no. It's a lot more complicated question you ask than can be done. Yeah,
the custodians can usually help answer those questions.
Yeah,
exactly. They usually they know what you can and cannot do.
Right? Yeah, and there's parameters too. Also, if you're married, your kids, how those agreements are done on contract. There's different ways and percentages also. There's a list of what you can and can't do, but the custodian usually can help you with all that too. So awesome. And Frank, one more question he's got. So if your change of ownership is made 2024, do I need to report the previous and the new owner, or just the new owner?
You report the owners as of the date that you're doing the initial report.
Got it.
Yeah.
Okay.
Now, again, guys, you want to check this yourselves. I'm not giving you any advice. I'm just telling you about the requirements so that you know it exists, and so you can do something about it. But check with your attorneys, check with your accountants, and reach out to them for help.
Absolutely.
Okay.
So I want to thank Jose. I'm not sure if Alexa's around.
There she is.
Oh, there she is. She just popped in.
Of course I'm here. I was just making sure we hit all the questions. But also I do have a winner.
Yep.
And I do want Jose to take a second to plug himself in and tell everybody where they can find him on social media.
Oh yeah, I'm gonna
where to
post
follow
something
you.
here. Yeah, I do a lot of tips on social media, guys, some tax tips. So follow me there. I use Instagram a lot. I love Instagram.
Yes,
So,
follow
there's-
Jose. It's on Instagram at Chief Tax Strategist.
Yeah, I just put the links there.
Perfect. He just posted all his links in the chat for you guys. Instagram at Chief Tax Strategist, TikTok at Chief Tax Strategist, follow at Advanced Tax Advisors as well. And same thing with Facebook at Advanced Tax Advisors. So go get connected with your local people, you guys.
Yeah.
And I will be sending each and every one of you a follow-up email. We did record today's class. It will be posted to the YouTube channel within 24 to 48 hours. So look out for that replay and share it with a friend. If you love your friends, guys, you need to share this information with them. So my winner for the 1-year membership is congratulations, Anthony W. I will be in touch with you shortly. And you guys, we will see you very soon, hopefully this Saturday. If not, we got a triple header next week. So you guys get some rest this weekend. Rest up because we have some awesome stuff for you guys next week, some raffles, a lot of value. So be sure you register for those webinars next week. And we'll see you soon, you guys. Thank you guys so much. Thank you, Jose. Thank you, Anish. Thank you all for joining today's class. Thank you guys for asking your questions as well. And we will see you next time.
Yep, we'll see you then. Thanks, guys. Take care.
Bye.
Bye.